I've got a lot going on. You probably think Washington is dead. It's on its deathbed, I will tell you that. I'm going to go through a lot, so here we go. The Farmer Bridge Assistance Program, help is on the way. It's a bridge program to get us from now for most of the row crops until October this year. It's funded $11 billion for row crops and $1 billion for specialty crops, and that includes sugar. That's not enough, and this is why the Congress very likely will have another farmer aid package, probably from February, March, or April. More on that later. The source of this bridge assistance program is USDA's Commodity Credit Corporation, CCC. President Trump keeps saying it comes from the tariff funds. He's just wrong. He just likes to say it because that's his ATM machine, okay? But it's incorrect. It's just incorrect. Congress, again, later this year will attempt another multi-billion-dollar package. The payments are going to be coming out no later than February 28th. I keep hearing Brooke Rollins will be at the Commodity Classic in San Antonio, and that's when she'll probably announce that the very next day that they're coming out, and that fits that timeline. Input costs are higher than revenue again. I give a lot of speeches, and I've given a lot of speeches the last few months across the entire great country that we live in. And I honestly have not seen it this bad in the ag sector since the 1980s. We're not as bad as the 80s, but if we have another year of low to very low prices, we could be there. And that's the significance of what's going on right now. You can see the One Big Beautiful Bill Act, which we in Washington call the OB3 bill. We had higher reference prices for the row crops, improved ARC, increased loan rates, including what the biggest increase in 40 years for sugar, much needed. Base acres are going to increase up to 30 million acres eventually, and they updated some payment limits. Bottom line, almost $50 billion investment, and it's the largest since the 2002 Farm Bill. You had a big farm bill in that OB3 bill, thank goodness, because it's harder and harder to get a farm bill through Congress any longer. Sugar loan rates, I know they're basic to your program, but I think it needs to be repeated of how significant that program can be in certain years. First meaningful adjustment to sugar price supports in roughly 40 years. It took a while, but they finally got it there. New USDA sugar loan rate levels, you know them, 24 cents raw cane, 32.77 cents for refined beet sugar. Of note, the huge increase in the OB3 was long overdue since loan rates had not kept up with inflation. Under today's conditions, it's still not easy. So I think you'll see the push for even higher loan rates in the years ahead, should be. You can see where the levels were before, and you can see that percentage increase, roughly 4.25 cents cane and almost 7.40 cents for beet. Implications, it improves financial certainty, and it helps your program operate without direct taxpayer outlays. Why they matter? It just improves income protection. Those are the basic guidelines, but we're going back to them, a foundation of foreign policy. Sugar supply, we have more and demand less, and you're going to hear from Rob, and I'm just going to bottom line from an analyst perspective. Lower oil prices are leading India and Brazil to temper the use of sugar and ethanol and focus on sugar exports. But I just wrote a story today where Brazil is tempering their ethanol exports because they're consuming more of their ethanol. Brazil, I'm going to end with Brazil. Brazil is the ag powerhouse in the world now. And there's some things that we need to mimic that Brazil is doing in order to come out of this gully that we're in. Changes for SNAP, WIC, and school nutrition programs is going to affect the consumption of sugar. You know, after the Health and Human Services Director, Robert F. Kennedy, says sugar is poison, where do you go from there? You know, it's just nuts what's going on in our nation's capital. You face converging food policy pressures. Yeah, now my speech should be titled Good, Bad, and Ugly, okay, to tell you the truth. But there's hope on the way. Multiple food policy debates are colliding at once for your industry. Combined impact could reshape consumer demand and reformulation trends with the school lunch program, the GLP-1. You can tell I don't take GLP-1 yet, okay? I'm waiting for the pill farm to come out, Eli Lilly, this June, and that's when your consumption of sugar is really going to go down, I'll tell you that. But these are converting, and they're real, and they extend beyond the traditional trade and foreign policy issues. You saw the dietary guidelines. They influence the school meals. Most people don't look at them on the outside, but in school lunch programs and federal programs and the WIC program, they do. And that can mean a lot of usage or non-usage of sugar. The added sugars debate, they blur the distinction across food categories. And you fear the stricter guidance could accelerate the reformulation and standards. And I think that's what may happen. There's the impact. If the guidelines are followed, it could mean a reduction of between 60 million and 250 million pounds of sugar for school meals each year. That's from the Sugar Association last week's meeting. And if the national school nutrition standards are completely eliminated, added sugars from school meals for children under 10, this would impact an estimated 1% of current demand. So these are signals to your industry. About 30 million children eat school lunch every day, and 14 million eat school breakfast. The key will be USDA's implementation. How are they going to implement it? Make America Healthy Again Commission. They've elevated food health and chronic disease discussions. The risk sugar becomes a shorthand policy target that they think is easy to target, but it won't be. Concerns center on a reputational risk and potential labeling or procurement impacts for your commodity. I've already mentioned GLP drugs and demand shifts. And one of the better conferences, other than this one, that I attend about every other year is the Future of Food. And it's usually held in Texas. And this past year it was held in Fort Worth. And I attended it. I spoke right after Farmer Ag Secretary Tom Vilsack. And the doctors on that, the speakers, the doctors, were very revealing. And I talked to them afterwards. And this GLP-1 drug is something to look into. It's just not a weight-reducing drug. It's just not for diabetes. It has positive inflammation activities. It's good for the heart, etc. So it's going to grow in usage. And that introduces uncertainty for sweetener demand and potential shifts toward smaller portions and less snacking. And manufacturers may pivot to protein forward and low sugar products. That's the signal I got from that conference. Why is this different? Policy, messaging, and consumer behaviors are now reinforcing each other. So it's like a corn seed, they're stacking traits now. Dietary guidelines shape long-term narratives, and the GLP-1 adoption can move markets faster than policy alone. This is like a boulder that's happening to me. Crop insurance, I'm not going to detail hardly any of this, but that OB3 bill put in $6.6 billion investment in crop insurance, and that's always good to me. Crop insurance is the best risk management tool I've seen in my 50 years covering agriculture. And there's really side programs that I tell a lot of producers, the ECO and SCO, if they are not subscribing to that program, I want to know why, because it pencils out with the dramatic increase in the subsidies to obtain those programs. Economic assistance, since January 2025, $42 billion. Now only, and you can detail this if you want, ask Jim and he'll send you my charts. Only half have been paid out. And that's why we need the bridge loan, if you will, or late aid, because the money has not been flowing. Here's the new aid package, about a little more than $15 billion in the Senate proposal. They haven't formally detailed it yet. $5 billion for specialty crops. Like, look at the difference. $1 billion, the administration's plan, $5 billion, congressional plan. Expanded farmer bridge assistance coverage, prevent plant eligibility, it will be included in this one, and higher payment limits. There's no means test that locks you out of the program like there is in the bridge assistance program, which I think was not farmer-friendly program, by the way. There is only a means test to determine how much you are eligible to receive. That's in the Senate package. Targeted relief above national averages. Sugar beet and cane assistance is a separate item, so I guess that's beyond the $5 billion for specialty crops, and that'll be relief for you all amongst the record losses in an oversupplied market. And that's Hovind from North Dakota and others fighting for your industry. And higher loan limits to increase farm ownership and operating loan limits. Some other policy decisions ahead. Implementation of the dietary guidelines, which I told you is very important, how they implement it. The next Make America Healthy Again Commission report. That's when they'll probably finally offer a definition of ultra-processed foods. And those are the foods in the middle area of any supermarket that RFK Jr. and others in Washington, not all, want to go after. And so I would watch that next report. Year-round E15 for corn, I think, is coming, especially after Trump's Clive, Iowa, a suburb of Des Moines speech last week, in which he put the onus on Congress to ink that. And I think it is coming in a supplemental spending bill that will include that $15+ billion that I just detailed. Top-up payments for the Special Disaster Relief Program, Stage 1, will probably come sometime in the summer, so I think there'll be some additional cash flow if you got any Stage 1 payments. Stage 2 of the SDRP was the worst USDA implementation program I've ever seen. They changed the rules of the game using the spring price rather than the fall price, and wherever I go in farm country, I'm hearing negatives on that one. Senators are pushing to reverse the decision to eliminate prevent plant buy-up coverage. I think they'll legislate that. And the other EPA decisions are coming for RFS for Renewable Fuel Standard Program for 26 and 27, and the affiliated questions are issues in that. And Treasury Department just this morning, so I haven't had time to look at the PDF document, but they finally released the 45Z program regs for sustainable aviation fuel. Now, why are these so important? We have to kick in domestic utilization now, because with Trump's dramatic change in trade policy that we still don't know the final verdict on it, it's tempering some exports, especially for soybeans and other crops. Not corn. We have record corn exports. But you have to pump up the domestic utilization, and you do that via food aid. You do that via the Renewable Fuel Standard Program and the 45Z. And that's the only way that we're going to come out of the carryover situation and price downturn. Now we move quickly to the Trump administration. Look at the one to the right. Bloomberg Business Week had this graphic that adequately shows covering the Trump administration. I'm a workaholic, and he's got me exhausted, okay? One viewer told me at the very end you'll see one off-ramp. With Trump, there has to be several off-ramps because he can go different directions. He's more flexible than people think. How is he different than Trump 1.0? He's even more impulsive. We're getting Trump on steroids. He knows a lot more about Washington. He learned his 4 years as president and even more during his 4 years out of the presidency, where he and his big staff worked every day trying to get ready for a second term that he thought would come. His focus is on trade, tax cuts, energy, make America healthy again, and deregulation. A White House person told me the best way to explain Trump 1.0 and 2.0 is in 1.0, America first was producers, and that included you and companies, and Trump 2.0 is consumers. And that probably explains what they're doing more than anything else that I can tell you. He has a more loyal cabinet now who won't write negative books about him, right away at least. A thumbnail sketch of some of the top stars of his cabinet. Treasury Secretary Scott Bessent, very smart guy. He helped negotiate the current U.S.-China agreement and was successful on the soybean side from the 12 million metric ton and now 25 million metric tons. Secretary of State Marco Rubio, first Latin American Secretary of State, passed 99-0 in the Senate. He's probably the most moderate of these people, but he's well respected in foreign policy issues, and he will be a future presidential or vice presidential candidate in his party. EPA Administrator Lee Zeldin. I never would have thought in my 50 years of covering ag that I would ever put an EPA administrator as a star for the ag sector. But this guy is. He listens to his boss. As a New York congressman, he was anti-corn-based ethanol. Now he's for it. And they've been rolling out, they had another announcement today on the right to repair on it. They're very farmer-friendly at EPA now, and that's really been a reversal over both prior Republican and Democrat administrations. U.S. Trade Representative Jameson Greer, he's the nerd of this group. He knows what he's doing. He helped negotiate parts of the U.S. Mexico-Canada agreement, and he helped on the U.S.-China agreement. And so when you listen to him speak, listen carefully because he usually has perfect follow-through. Secretary of Agriculture Brooke Rollins. Best way I can explain her is she's Trump with a skirt. She's very close to Trump. She can get him on the phone at minutes' notice. She was in the running to be White House Chief of Staff. That tells you how close she is to Trump. The negative on her that I hear is that she needs to speak more to actual producer groups and associations rather than be on Fox Business and Fox News and CNBC all the time. So it's not a perfect record on here, but she's the most articulate ag secretary I've covered since Earl Butz, for you long in the tooth like I am. Will Congress get more bipartisan or more partisan? Regretfully, more partisan, and just the way it is. 80% of House seats are not competitive. So this is why a Republican or a Democrat are more worried about being primaried or challenged by their own party. You're seeing that in Louisiana in your Senate race on it. I look at the odds, these odds groups now, these predictor markets, and Kalshi is one of them. They've been quite accurate on elections over the last few elections. And they think 67% odds that the Republicans will retain control of the Senate, and 77% odds that the Democrats will regain control of the House. I know it's early and things can happen, but even Trump is getting forlorn in some of his comments about what could happen in the House race. And that'll change the structure because you'll have investigations galore of the Democrats if they control the House. So it's just an easy explanation. As far as the future in politics, it's just too early. But I was asked, I just came from Florida, Orlando, 24 degrees there. I couldn't believe it. And at the Farm Credit Council meeting, and a person asked me, if the next presidential election we have a Democrat, does that mean we swing another pendulum when it comes to policy? And it was a good question, and I said, I want to know which Democrat is going to be at the head of the ticket, but even more important, what do the Democrats stand for? That's not really being asked right now. I'm getting the feeling wherever I go now, Americans are being frustrated with both political parties. They're just seeing all this dramatic change, and the middle of the road is roadkill right now. If you're moderate, you're just center right or center left, you're roadkill. And that's frustrating to a lot of Americans. Affordability is going to be the key election issue. Sticky inflation, beef prices are still high. Unemployment, relatively low, I think will be going up. Healthcare, whether it's individual or child care, is a very important topic no matter where you go. Electricity prices, I live in Loudoun County, Virginia, and we're a data center capital of the United States. And I just looked last month, I used less energy, but my monthly bill was $100 more. It's due to those data centers. And we also have downtime. I've never had a number of days where electricity has been down due to overuse of electricity. It is now in Loudoun County, Virginia. Tax cut benefits, we're going to see if that's going to pump the U.S. economy, but at least some analysis shows it'll land primarily in the wallets of well-to-do households, and you can see the gambit right there. What's the ag legislative agenda? We have a cost price squeeze. Many of you growers are feeling it, not so for cattle or hogs. If there's any cattle people in the audience, my birthday's June 15th, and I expect a birthday present, okay? It doesn't get much better than cattle, okay, unless you're buying feeder cattle. Anxiety from farmers and ag bankers and farm credit over cash flow. It's there, and Congress is listening. They're hearing it. More aid for the ag sector? Better be. Will there be a Farm Bill 2.0 or skinny farm bill or not? Depends on one person. I'll make it easy for you. Representative Angie Craig, the ranking member of the House Ag Committee, a Democrat who's running, by the way, for Senate in Minnesota. Does she want a bill or does she want an issue? So if she comes out in favor of it, it'll go. Because the Republicans need they'll lose about 40 Republicans voting on any farm bill. So that's why they need Democratic votes. So watch Angie Craig. Trump's trade, do I have there? Yep. In the Senate, Klobuchar is running. She's the ranking member on the Senate Ag Committee. Now she's running for the Minnesota governor's race. She's a former prosecutor, so if I think there's anybody who can clear up that fraud mess that they have in Minnesota, it may be her. Farmers in Minnesota told me they didn't want her to run for governor because they like her as the ranking member. If she wins, and she will, Cory Booker, Democrat from New Jersey, will be the ranking member, or the next Ag Committee chairman if we have a wave election and the Democrats win the Senate as well. Cory Booker is a vegan. Okay, I don't think cattle people will like that. And he's been focusing on checkoff programs, so that's going to make some farm groups pretty nervous if he delves into checkoffs, which are needed. I'm very positive, mostly, on the checkoff programs. And he's big on conservation programs, so that's his initial pedigree, and you're going to have a different either ranking or lead member. Trump's trade policy from the White House, this is what they tell me are their goals. Restore equity in trade, protect U.S. manufacturing and the supply chains, generate revenue for the federal government, that's those tariffs funds, strengthen domestic industries like steel, aluminum, autos that has affected farm machinery prices, establish American power over global trade rules. Most of those are Pretty spot on. What's the focus? What's their focus? Energy, investment, funding, and infrastructure needs. Notice I didn't say agriculture. Many farmers tell me they want to see the additionality of all the stuff we've gone through with the trade policy. Where's the additionality? They're not seeing much, and they haven't, not yet. Some in the rice market with the increase in Japan's rice market share. Japan didn't increase their imports. They just gave us more of their market share. Ethanol has been an initial winner. But other than that, I don't see the numbers yet. Waiting on trade frameworks to show up. This shows the gap between our agricultural exports and imports, and we have multiple years of deficits. And that tells you something's wrong with trade policy. Recall the U.S. and Mexico suspension agreements are up for renewal. They allow Mexican sugar to enter the U.S. in a way that prevents Mexico from dumping again. So I think that'll be rolled into those talks. And each country is going to want certain things, and so we got to watch that. They're going to have a formal negotiation, begins in July, but they're really talking already. There's your tariff revenues under Biden and the Trump administration. Look at that far right. Trump loves, that's his ATM machine. He loves money, you know, and that's why he wants to use it. But we're going to see the Supreme Court rule on that no sooner than February 20th when they come back from their recess. Now, if they rule against him, if they say his trade policy is unconstitutional, they have a series of tools they can use in here, but it'll be cumbersome to do it. So we're waiting on that. Policy backup, we're at the end here. We have low prices and margin stress are dominating farm economics. Acreage competition is going to happen this year between corn and soybeans, so they're going to have a rally in the spring. But if we have a continued market downturn, the aid versus no aid debate is going to continue. There's some people saying, isn't there aid fatigue here? Is it Washington hearing any that ag is asking for so much, for so long? I'm not hearing it, but I hear outside of Washington that question is being raised. Will corn exports, record exports continue? I think so. Soybeans have to pump up domestic use because Brazil is far more competitive. China can buy their soybeans $1.25 or more cheaper in Brazil than the U.S. Sugar, will we continued impact from GLP-1? The RFS and 45Z details are key for a number of important commodities. Labor, wherever I go, agribusiness people tell me not only is it hard to find labor, but how to keep it. So will Congress ever have an immigration reform bill? Confronting China, we are in an ideological war with China. And so this Xi Jinping and Trump agreement is a truce. It's not a total agreement. It's not going to last all that long. And look at on the chart that shows China's exports and the imports. They're affecting more than the United States. A number of developing countries are feeling the pain of cheap, subsidized Chinese exports. Confronting Brazil. Low prices and Brazil's rise is structural, not cyclical. They're here to stay. Long-term soybean acreage growth is going to continue in the Cerrado and Center-West regions. Since the U.S.-China trade war in Trump's first term, Brazil has increased soybean production by 40%. 40%. Heavy reliance on second crop corn, safrinha, creating large mid-year surpluses, so that's been a competitive force against U.S. corn. Strong alignment with China demand. They probably have too many eggs in China's basket. Logistics is no longer Brazil's weak spot. Billions of dollars have been pumped into Brazil's transportation sector, and not just including the railways. They have a Northern Arc Railway that is just beginning. Fertilizer, they're import dependent as well, but unlike the U.S., they're taking action to increase domestic fertilizer production by tax incentives and other areas, so we ought to mimic that one. They're well beyond soybean and corn competitor. Cotton, they're now the world's top cotton exporter. Sugar, They have a flexible sugar-ethanol mix, gives Brazil outsized influence on global prices. Ethanol, rapid growth in corn demand, and I mentioned before, they're using more domestically, and it affects their it affects their sugar ethanol blends. Livestock, expanding beef, poultry, pork exports are embedded as their key advantages in foreign exchange. This takeaway that I want to leave you, Brazil has built a self-reinforcing grain, biofuel, protein flywheel. We can do the same thing. I think we ought to be like Apple. I love Apple, my iPhones and whatever. They were never the first to come out with an innovative product when you think about it, mostly. They just took what others have done and did it not just better, but a lot better. Americans can do that. We can compete, but success depends on execution, diversification, and moving up the value chain. Positive developments, my last two, because you can get down, and, this is not a good time in ag. But again, I was raised as a child that a glass half full is very good news because my father remembered when it was empty. So here's what my knowledge tells you. One, dietary guidelines can be a boost for dairy and protein, but not for sugar. The RFF mandates for 26 and 27 will pump up demand for corn and soybeans. 45Z programs will definitely be a big boost for multiple years for soybean oil. Congress will provide at least $15 billion additional farmer aid, coupled with the $12 billion in farmer bridge assistance, and that'll help bridge the cash flow until we get to the new Title I provisions in October 26. Farmers are will get STRP Stage 1 payments in a top-up sometime this June, and that'll mean significant cash flow during the summer months. Early spring rally in corn and soybeans versus planted acreage competition. If China lives up to its purchase commitments, they did on the 12 million metric tons, and by 25 million metric tons in a soybean marketing year, that's big news. Pressure on Congress approving a year-round E15, I think, will come in the supplemental spending bill. The U.S. economy is going to be more growth than most expect, and it will boost overall demand for farm products, including sugar. And interest rates are going lower, probably 2 more Fed cuts this calendar year and more if needed. Trump announced his Fed nominee, Kevin Marsh, who is a dove on interest rates. He thinks interest rates are too high right now, but he's a hawk on the Federal Reserve balance sheet. In other words, he wants to, he's got different issues on quantitative easing. So the market is a little uneasy as far as which direction that he'll focus on. I think I'm there. I went through a lot. You can ask after Rob, ask individual questions. But again, we're in a state of flux right now. But thank goodness economic assistance, whatever it is there, and I think more is coming because it's called food security. And don't believe even some ag reporters are writing that this is a bailout. It's an insult. No way does this make farmers whole, not even with the additional $15 billion. And I've seen in my long history of coverage of ag, multiple down years don't last that long. So something happens. I can't pinpoint what it's going to be, but I would think sometime this time next year, we're going to have a different story to tell, and it'll be an uplifting story. Thanks a lot.